Good morning, traders. Richard here, and quick Ichimoku cloud chart market review of Meta. We just recently broke out of this period of consolidation, a nice little base breakout there, and it broke past this significant resistance zone here. We can see this old cloud chart support and resistance zones held. We managed to break past that and very close to the next upside target of 691. If we get past that resistance zone, then the other two upside targets would be the 736 and 741. But just watch out. By the time we get here, we'll be quite far extended from the top in the cloud, so it would be natural to assume we had another consolidation in and around this price target there, and then another rally to the upside. You can see the last couple of volatility breakout signals was delivering good profit. This was the most recent one here, back on the 7th of April. A nice strong rally. Did pull back, didn't hit the stop loss. The stop loss was right down here at the bottom. And then we had another confirmation of this move when we sliced through the turning line of the Ichimoku cloud. That became support. Then briefly the standard line of the cloud became resistance. We pulled back and then broke through that, and then we also triggered a Ichimoku cloud chart buy signal. In addition to that, by this time Meta was starting to outperform the S&P on a relative basis, so there's two other buy signals in and around that zone. So we had plenty of buy signals below the cloud, and then we got the classic cloud chart buy signal as well. Broke through the cloud, which was another Ichimoku cloud chart buy signal. Broke through that resistance, took some profit in a couple of trades at this level, waited for the pullback. Note how it rebounded from this moving average as well as the turning line of Ichimoku cloud, and then made another attempt of breaking past that cloud chart resistance level. So now we up in the races here, as we say. 691 next target, and then these other two targets, 736 and 741. Let's take a look on a 4-hour at Ichimoku. On the 4-hour, we also got in April our swing trade and volatility breakout signals below the cloud. A nice strong rally there. Got the cloud chart buy signal on the 4-hour, cloud chart cross buy signal there, and then off to the races. You can see every time we pull back to the turning line Ichimoku cloud, that became quite a significant support zone. And then we saw this back and forth water torture on the turning line. So the turning line was quite a lot of support there. It was very close to the top end of the front end of the cloud, which also a critical support zone. Then broke past this cloud chart resistance. You can see that resistance zone there. And then we've got these upside targets. The first one is 691, and the second one, which is the top end of the Ichimoku cloud back here, that's 712. So keep those levels in mind. Now, I've used the Fulgent AI engine to generate these signals. The AI has been trained specifically on Meta for that, and these are all high probability trade setups. There's more information at the end of the show with links if you're interested in the Fulgent AI engine. So let's go and take a look at the weekly. Taking a bit long to load. We've had some really great signals on the weekly chart as well. You can see plenty of high probability trade setups, volatility trades, all profitable. And then by this time we had that huge rally up, and then a climatic run up, and then we saw that Meta was way extended from the top in the cloud chart, where we measure the price action between the top end of the cloud, bottom end of the cloud, and the price action. So we look at that distance. When it becomes too far extended, then we get a consolidation back to the cloud chart for support, and then a strong rally from that zone. So keep an eye on when we become too far extended from the top end of the cloud back to these old highs there for the upside targets there, then we might have another period of consolidation, and it's going to try and break out of that consolidation base. So that's the setup on the weekly. The daily, keep an eye on for the price interaction at these upside resistance targets. See that low. See how there we go. Keep an eye on these. These are the upside targets: 691, 712, and then 736 together with 741. So these are the upside targets. By this time, Meta will definitely be way too far extended from the top end of the cloud. These levels are now the major support zones for the rest of the year. Top end of the cloud here, and as we go along, the standard line will also catch up and level out here at this 650, 660 zone. So that should be the new support zone at that point in time. As long as we form a base above that level, Meta should be okay in the current rally. If we delve in a little bit deeper into the financials of Meta, we look at the Starmine models here. Now, Meta, I'm just looking at it as a momentum trade. The stock, in terms of intrinsic valuation, relative valuation, is a little bit on the expensive side. And if we look at the individual models there, the earnings quality ranks in the top 20% of the market. That's good. Credit risk is all good, so there isn't really a risk that Meta is going to have financial trouble. The relative valuation and intrinsic valuation is the key negative here. Stock is in a very expensive stock, but considering its type of business model, one can still trade it up and around those extreme levels to those upside targets. Price earnings ratio wise, trailing 12 months 27 times, forward is 24, and the price to cash flow ratio there is 18 to 15, so that can actually still need some improvement on that basis. EV to sales and dividend yield is ranking in the bottom 20% of the market there, so not particularly attractive on that level. Now, what is interesting, if we look at the most accurate analyst estimates and we look forward, we can see the market implied growth rate's about 13% per annum for the next 5 years or so. So you can see that the current stock price, if you reverse engineer, you input the stock price and out pops the growth rate, you can see that's about 13%. That's the market implied growth rate, which is probably not too far off to what Meta can do or keep going consistently. So keep an eye on that. Do know that the stock is quite expensive on a relative valuation basis, but so we are looking at it in this case on an absolute basis, and we do like the earnings quality rank of Meta. That's quite high in terms of earnings growth and the quality of the earnings. So yeah, we delve deep into the balance sheet and income statement, and we analyze all the inventories and things like that, going into a lot of detail in the stock, for example. But so far so good. Nice base breakout there in Meta. The volatility adjusted stop loss is within the cloud, but I personally would have put it right below this level, maybe right about there at 635 should be the trailing stop, just below that new support zone. So that's the trailing stop on Meta. So far so good. Nice base breakout, and keep an eye on for these the price interaction with these upside resistance targets, and looking for profit taking in and around those zones. Until next time, thanks for watching, and happy cloud chart and AI trading. Bye for now.